TRNC Earthquake Tax. In recent years, the Turkish Republic of Northern Cyprus, TRNC, has faced a number of fiscal changes, including the introduction of a new tax, the earthquake tax. This tax was introduced in response to a number of earthquakes that occurred in Turkey and had a significant impact on the economy and population of the TRNC. We hope that this article will be useful for those who are looking for information about the TRNC tax system, and will help you better understand how these changes may affect you. History and reasons for introducing the tax. The TRNC earthquake tax was introduced in response to a series of earthquakes that have occurred in Turkey in recent years. These disasters have had a significant impact on the economies of both countries, causing the need to restore infrastructure and help affected residents. The introduction of the tax has become one of the ways to raise funds for these purposes. The TRNC, Turkish Republic of Northern Cyprus, and Turkey, being in a seismically active zone, are regularly subjected to earthquakes of varying degrees of strength. In 1999, Turkey was rocked by two major earthquakes that killed tens of thousands of people and caused tens of billions of dollars in economic damage. In response, the Turkish government introduced a special tax in 2000, known as the earthquake tax, to raise funds for earthquake recovery and finance further measures to prevent and mitigate the effects of earthquakes. This tax was introduced as a temporary measure, but was later made permanent. The funds raised from this tax are used to finance the construction of earthquake-resistant buildings and infrastructure, train specialists to deal with the consequences of earthquakes, and provide assistance to victims of earthquakes. In the Turkish Republic of Northern Cyprus, such a tax was introduced later, also in response to a series of earthquakes and in preparation for possible future disasters. This made it possible to mobilize the necessary resources to implement measures to prevent and mitigate the consequences of earthquakes. Impact of the earthquake on the economy and population of the TRNC in Turkey. The earthquakes that occurred in Turkey had a significant impact on the economy and population of the TRNC. In addition to direct damage from the destruction, they have led to a decrease in tourist flow, increased recovery costs, and a deterioration in the overall economic climate. As a result, it was decided to introduce an earthquake tax. In addition, the earthquakes in Turkey and the TRNC led to significant human losses and mass displacement of the population. Many people were left without homes, jobs, and basic means of subsistence. This led to an increase in the cost of social support and rehabilitation of the housing stock. From an economic point of view, the earthquakes also led to a reduction in investment in the country due to increased risks. This hindered economic development and recovery from the disaster. Experts estimate that recovery from major earthquakes can take decades and require significant financial resources. In light of these developments, the government of Turkey and the TRNC have taken a number of measures to strengthen the seismic safety of the countries. Building codes and regulations that provide for building resistance to earthquakes were introduced, and training programs were conducted for the population on how to act in conditions of seismic activity. An important aspect of the impact of earthquakes on the economy of Turkey and the TRNC is their impact on the agricultural sector. Earthquakes can lead to damage or destruction of agricultural land, which significantly reduces production and can cause food shortages. The amount of tax and its dependence on income. The amount of earthquake tax in the TRNC depends on the taxpayer's income. The higher the income, the higher the tax rate. This is done to ensure that the tax burden is fairly distributed among all segments of the population. All funds raised from this tax are used for earthquake recovery and assistance to victims. The exact rates of earthquake tax in the TRNC may vary depending on the specific region and income level. But in general, they can range from 1% to 5% of total income. For example, if your annual income is $50,000, you can expect to pay between $500 and $2,500 a year in earthquake tax. If your income is $100,000, the tax can range from $1,000 to $5,000 per year. However, it is important to note that in some cases, benefits and discounts may apply. For example, a lower tax rate may be set for pensioners, disabled people, and people with low incomes. Discounts can also be provided for those who invest in improving the seismic safety of their home. In any case, it is recommended that you contact your local tax authorities or a professional tax consultant for the most accurate information. Other taxes in the TRNC. In the TRNC, in addition to the earthquake tax, there are other taxes. These include income tax, real estate tax, transportation tax, and property rental taxes. All these taxes affect the financial condition of residents and the country's economy as a whole. 1. Income tax. This is a tax that is paid by citizens and residents of the TRNC on their annual income. The income tax rate may vary depending on the level of income, but usually ranges from 10% to 35%. 4 bedroom villa from €347,660 Chautauqua, Northern Cyprus Chelsea Village, from €143, 859 Kyrenia, Northern Cyprus Villa Edermit, from €467, 543 Alsanjak, Cyprus Villa Alsanjak II from €587, 426 Alsanjak, Cyprus 3 bedroom villa from €231, 400 Karshiyaka, Kyrenia, Northern Cyprus 3 bedroom villa from €439,068 g. Esentepe, Cyprus real estate tax. This is a tax that is paid by property owners in the TRNC. The property tax rate can also vary, but is usually around 1.5% of the assessed value of the property. Transport tax. Owners of cars and other vehicles in the TRNC are required to pay a transport tax. The rate of this tax depends on the type of vehicle and its age. Property rental taxes. Tenants of real estate in the TRNC are also required to pay taxes. The rental tax rate is usually around 10% of the rental price. The cost of these taxes can vary depending on many factors, including the location of the property, the type of property, the tenant's income, and others. Therefore, it is important to consult with a qualified tax advisor or lawyer to make sure that you are calculating and paying your taxes correctly. Earthquake tax comparison with other taxes. Note: information about tax rates is subject to change, so we recommend that you check with local tax authorities or consultants for up-to-date information. Tax validity period. The TRNC earthquake tax was introduced as a temporary measure. The term of its validity is determined by the TRNC legislation and depends on how quickly you can recover from earthquakes. It is assumed that the tax will remain in effect until all the consequences of earthquakes are restored. At the same time, the tax term is regularly reviewed to make sure that it is still necessary and effective. If recovery is determined to be faster than expected, the tax period may be shortened. Otherwise, if additional funds are required for recovery, the validity period may be extended. It is also worth noting that the amount of tax may vary depending on the need for restoration. All these changes are regulated by the TRNC legislation and discussed with the public to ensure transparency and fairness of the process. Thus, The validity period of the earthquake tax in the TRNC is not fixed and may change depending on the circumstances and needs for post-earthquake recovery. How to prepare for tax payment. Preparing to pay the TRNC earthquake tax requires budget planning and financial preparation. 1. Knowledge of tax legislation. Understanding the laws and regulations that govern taxes in your area will help you determine what taxes you should pay and how to calculate them correctly. This will also help you avoid unnecessary fines and penalties. Budgeting. Set aside a certain amount of money each month to pay taxes. This will help you avoid stress and financial difficulties at the end of the tax period. Revenue accounting. Keeping track of all your income will help you calculate the tax amount correctly. Include all sources of income, such as salary, income from independent activities, income from renting real estate, income from investments, etc. Determining the amount of tax. Use all available tax breaks and deductions to reduce the tax amount. If you are not sure about your calculations, contact a tax consultant for help. Timely payment of tax. Pay the tax on time to avoid fines and penalties. If you can't pay your tax on time, please contact the tax service and discuss possible payment options. Preparation of documents. Keep all documents that may be necessary to confirm your income and expenses. These can be checks, invoices, lease agreements, bank statements, etc. Consultation with a tax specialist. If you have complex tax issues or are simply not sure how to calculate or pay your tax correctly, please contact your tax advisor or accountant for help. International experience in introducing such taxes. The introduction of an earthquake tax in the TRNC is not unique. Similar taxes exist in other countries that have also experienced the effects of earthquakes. This allows you to compare tax systems, study international experience, and apply best practices. New Zealand. In New Zealand, there is a special earthquake tax that is levied on property owners. The funds received from this tax are used to finance measures to prevent and eliminate the consequences of earthquakes. So, after the devastating earthquake in Christchurch in 2011, thanks to this tax, the authorities were able to quickly restore the city's infrastructure. Japan. Japan, a country with a high level of seismic activity, also has an earthquake tax. This tax is used to finance disaster prevention and recovery activities. It is important to note that in Japan, this tax is voluntary, and its rate depends on the value of real estate and the level of seismic activity in the region. Chile. In Chile, another country with a high level of seismic activity, the earthquake tax is used to create a reserve fund. This fund is used to finance reconstruction work after earthquakes and other natural disasters. How to appeal the tax amount. If a taxpayer considers that the amount of the earthquake tax in the TRNC was calculated incorrectly, they have the right to appeal against it. # Detailed instructions for appealing the amount of tax collecting evidence. If you think that the tax amount was calculated incorrectly, please collect all the necessary documents that can confirm your position. This may include documents confirming your income, expenses, property status, and other factors that may affect the amount of tax. Filing a complaint with the tax service. Formulate a complaint stating your arguments and attach the collected documents. You can submit a complaint in person to the tax office or send it by mail. Waiting for a solution. After filing a complaint, the tax service will conduct an audit and make a decision. The time for reviewing a complaint may vary, but it usually takes from a few weeks to several months. Appeal of the decision in court. If you do not agree with the decision of the tax service, you can apply to the court. To do this, you will need to file a claim and provide all the necessary documents. Legal support. In case of applying to the court, It is recommended to seek the help of a lawyer or a lawyer specializing in tax matters. They will help you complete all your documents correctly and represent you in court. Keep in mind that appealing the tax amount is a complex process that requires time and patience. However, if you are sure that you are right, do not be afraid to defend your interests. Conclusion. The introduction of an earthquake tax in the TRNC was a response to the serious challenges that the country faced as a result of the earthquakes in Turkey. This tax is an important tool for restoring the economy and helping affected residents. Despite the fact that it increases the tax burden, thanks to a progressive tax system, the tax burden is fairly distributed among taxpayers. It is important to remember that the earthquake tax is a temporary measure. Its validity period will depend on how quickly you can recover from earthquakes. As the economy recovers and the situation improves, we can expect a revision of tax policy.